Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A superb key reversal down yesterday with another new recent low. Prices pushed past target X at 114.50. This had been the target for the recent July to September bearish cat's ears pattern. It will be retired after this commentary. The market also moved down past the June 2020 high, so that we're now at levels not seen since, well, July 2020. Below we now have one of the key descending supports, the middle time currently at 113.25 of the January to May bearish Andrews pitchfork. Now this pitchfork has run the whole of 2021's action and drops by about 5 ticks a day. Beyond that, well, we have some congestion in the 112.89 area, and then the interesting reverse head and shoulders neckline currently at 112.67 of the April to May 2020 move. All this comes in the shadow of September's monthly key reversal down. Now so far today, a reactionary start with a move back up a little after yesterday's significant drop, but dropping back towards testing the lows of yesterday right now. Cable, aka sterling against the US dollar. An interesting higher, yet still indecisive doji cross yesterday. The move higher was in response to Friday's bullish engulfing pattern, but the indecisive doji cross, well, that was the market's own work. We're now back in between the middle time below, currently at 132.68, and the upper time above, currently 136.12, of the early September to late October bearish Andrews pitchfork. We're also still quite a way below the broken July to date sideways triangle, for which we have the targets down here. An initial target X in the 134.90 area has already been achieved twice, whilst the secondary target X1 in the 132.65 area, well, that still sits below. It is, as I've often stated, a harder target to reach. A couple of final points. I've droned on interminably about the longer term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September and early October move down, and the last 2 weeks action revitalized this idea enough that I'd mention again the target I had originally placed below. Initial target X in the 133.60 area and a secondary target X3, initial target I should say X2 in the 133.60 area and a secondary target X3 in the 131.10 area. Now last Friday saw target X2, that's the initial target for this pattern, reached. As you can imagine, target X3, the secondary target, is so much harder to reach. So far today, a slightly higher open and a test down towards yesterday's low, which was rejected. And we've since seen prices move higher towards the September 2020 high at 134.83 and the 2019 high even at 135.16, though the move up has so far been a tempered move higher. Euro sterling. A second bearish black crow and a bearish black Mariposa as well, as prices opened in between the overhead medium moving average, currently 85.31, and the lower short medium moving average, currently 85.19. Prices then pushed down through the floor of these two moving averages and dropped as far as the April low at 84.70, where they held. I suspect this may not be the end of the move down, as we started from the heights of the refusal of the long moving average, currently 85.73. That was only last Friday. Below the April low we have some small congestion at the 84.30 to 84.20 area, and then the low for 2021 at 84.01. However, I suspect the broken upper channel line currently at 83.80 may be where the strong support below currently resides. Finally, I'd like to say a few words on the reincarnated idea of the June to date expanding broadening wedge pattern. I've been minded to look at the shallower lower trend line based from early August as the new trend line. That's currently 83.89 for this period. Though I am still seriously considering relabeling the chart, I have some doubts about this whole idea right now, and I will continue pondering it for a little while. Now so far today, the market's punched down through the support from the April low at 84.70 and is moving down towards that next support area, 84.30 down to 84.20 area. US dollar against the Indian rupee. A second consecutive indecisive pattern yesterday, this time slightly higher yet still indecisive spinning top. The base of the action was more clearer this time. It was supported once again by the multi-combination of the short medium moving average, currently at 74.31, the 50% Fibonacci line of February to April 2020 move at 74.26, the medium moving average, currently 74.30, and finally the broken downtrend and trendline combination of the April 2021 to date move, currently at 74.29. This quartet of supports had previously been seen late 2 weeks ago trying to hold the market up and failing. However, in what has elements of an ascending market at the moment, it seems to have worked better. Overhead, we still have the descending early October to date downtrend, currently at 74.56, with the 50% Fibonacci line of the April 2020 to February 2021 move just above at 74.63. Now, going back for a moment to the previously mentioned broken downtrend and trendline combination of the April 2021 to date move, this trendline makes up the large April 2021 to date, obviously, sideways triangle. This triangle, broken on the top side, originally gave some targets above, which have since been retired due to lack of follow through higher. I was looking yesterday as to whether I ought to resurrect the targets for this sideways triangle or wait to see if another pattern emerges. I'm inclined today to wait. So far today, a higher opening market with a somewhat half-hearted attempt up towards the overhead downtrend before pulling back down. We're indeed on for a daily key reversal down today if prices can close below 74.34, or for a daily key reversal up if we close over 74.38. Right now, well, we look a bit like a larger yet still indecisive spinning top pattern. Please note this market is still based on that quartet of combination of supports and still capped by that recent downtrend. US dollar against the Brazilian real. An immediate countering bullish harami on Friday. This was prompted by the testing below during the previous session and also failure to close below the two adjacent 50% Fibonacci lines. That's the May to June move at 539.28 and the whole of 2021 so far at 538.46. Now, I would be remiss if I didn't mention that I suspect the flatlining long moving average, currently 536.15, that's just below this pair of 50% Fibonacci lines, also might have played a significant part in this pullback up. The market pulled back up and closed over the rising short medium moving average, currently 543.10, but fell short of testing the overhead middle time, currently 549.58, of the late July to late August bullish shift pitchfork. And this pitchfork affords a more shallower bullish angle of attack compared to the recently broken bull channel of early November. All this is in the shadow of the weekly key reversal down from 2 weeks ago. US dollar against the Mexican peso. An immediate countering bullish harami just yesterday. Now, this was coming after last Friday's key reversal down and bearish engulfing pattern. The market punched up through and closed over the 50% Fibonacci line for 2021 so far at 2058.49, as well as pushing up over the nearby lesser Fibonacci level at 2060.62, though closing right on this latter one. I have a suspicion now, with yesterday and Friday's actions, that the rising short moving average, currently at 2046.17, may have started to play a significant role this week as being the base of the current move higher. I also suspect that this has been prompted by the wide band of dynamic support below, stretching currently from 20.3105 down to currently 20.0637. I've highlighted this band before, and it is made up from the mess of moving averages below, consisting of the rising short medium moving average, currently 20.3105, the long moving average, currently 20.1976, and the medium moving average, currently 20.1738, with below all of these the upper trend line of the recently broken descending triangle, currently at 20.0637. Now, I would note that the congestion band is starting to widen out and thus perhaps lose some of its concentrated power, but we'll not know that unless we test it. Overall, it still leaves a question open on whether the September to date action is a bullish halfway hesitation or a topping action. It also leaves open, though, with perhaps a seeming diminishing chance of success of achieving target X1 in the 21-23.5 area. This is the secondary topside target for the June to date descending triangle, and one usually actually hard to reach. We've already reached the primary target X in the 2089.20 area. All the recent action should be seen in the shadow of the weekly key reversal up made 3 weeks ago. So far today, a hesitation based around the close of last night, plus the lesser Fibonacci line at 20.60.62 and the 50% Fibonacci line at 20.58.49. And looking like an indecisive spinning top right now, though it is above the lesser Fibonacci line at 20.60.62. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investors Services International Limited. And here comes the final bit.